Representative Fishbein of the 90th, the other floor.
Thank you, Mr. Speaker, and good afternoon. I just, not knowing the difference between the underlying and the amendment, I just had some questions on the amendment, which I believe becomes the bill, if I may.
Please proceed.
Thank you. I'm looking for the interest section within the language, and if I could just be pointed to those particular lines through you, Mr. Speaker.
Representative Doucette.
Through you, Mr. Speaker, it is in Section 3, subsection 2, starting on lines 109, in that section there. Through you, Mr. Speaker.
Representative Fishbein.
Thank you, Mr. Speaker. And is that the reference to the New England Fund rate? Through you, Mr. Speaker.
Representative Doucette.
Through you, Mr. Speaker, yes, that is correct.
Representative Fishbein.
Thank you, Mr. Speaker. And why are the taxpayers having to back these loans? Understanding that my review of the language shows that the maximum is a $20 million loan payout, but the backing is only 10% of that, which is $2 million. Why are the taxpayers having to shoulder that burden under this language? Through you, Mr. Speaker.
Representative Doucette.
Through you, Mr. Speaker, it is a limited guarantee, as the good representative summarized, of no more than $2 million. The state is further secured by CHFA getting a mortgage on the property. Through you, Mr. Speaker.
Representative Fishbein.
Well, thank you, Mr. Speaker. I don't know that answers the question, in that 10% of it is being guaranteed by the state. Why do we need the state? Why isn't this just a private situation that we would authorize these loans? Through you, Mr. Speaker.
Representative Doucette.
Through you, Mr. Speaker, the intent is to provide some relief to homeowners affected by crumbling foundations through no fault of their own, which is a problem which is well documented in this chamber and in this state. It affects real estate values throughout the state. Through you, Mr. Speaker.
Representative Fishbein.
Thank you, Mr. Speaker. I still haven't heard, I don't know why the taxpayers need to be on the hook, but moving forward from there, there's certain requirements as far as what this money is to be used for. And for instance, it can't be used to put an addition on a property, or to, per se, improve that property, but to fix these situations. Who in the state is going to be charged with making sure, to protect the taxpayers, because they're on the hook here, for making sure that the money is not being used for those things? Through you, Mr. Speaker.
Representative Doucette.
Through you, Mr. Speaker, since it is a private loan from a private bank, the bank, through their normal standards of due diligence and underwriting, would determine whether or not the expenses are eligible repairs. And the language is quite detailed, as you will see in the bill. Through you, Mr. Speaker.
Representative Fishbein.
Well, thank you, Mr. Speaker. So that's exactly the reason why we would not want the state to get in here, because we're relying upon the private people, the homeowner and the bank, to enter into this arrangement based upon their trust. But the state's not, and the taxpayer is not being protected here. So if a bank was to give a loan, let's say, erroneously or because they didn't do their due diligence, for a increasing the size of somebody's single-family residence, is there liability on the bank to protect, once again, the taxpayer? Through you, Mr. Speaker.
Representative Doucette.
Through you, Mr. Speaker, the bank would have liability in that it holds the loan. The state would have liability in that it provides the guarantee that would back a default. Through you, Mr. Speaker.
Representative Fishbein.
Well, thank you, Mr. Speaker. But taking that a step further, if the bank is not paid by the residential homeowner, and therefore the state has to come in with their guarantee and pay the bank, I believe the language says that the state then steps into the feet of the bank. Is that true? Through you, Mr. Speaker.
Representative Doucette.
Through you, Mr. Speaker, that is true. CHFA would hold the mortgage, would have the ability to foreclose that mortgage to recover the state's investment behind the guarantee. Through you, Mr. Speaker.
Representative Fishbein.
Thank you, Mr. Speaker. So now that the state is put into the shoes of the bank and ascertains through its due diligence, many years perhaps after the loan has been given, and finds out that the bank did something wrong, didn't do their due diligence, will the bank be able to be sued by the state through you, Mr. Speaker?
Representative Doucette.
Through you, Mr. Speaker, that is not dealt with in the bill. I will say that the definition of eligible repair expenses in the bill is quite detailed. Through you, Mr. Speaker.
Representative Fishbein.
Thank you, Mr. Speaker. Yes, I agree. It is quite detailed, but the problem is that where it's trust. There's nobody here that's protecting the taxpayer. So it's a private contract, and we're stepping in to protect one of those individuals should there not be payment. And I don't think that that is the proper way to deal with this. It has not been proven to me why the state needs to be any guarantor in this situation. Thank you, Mr. Speaker.
Representative Doucette, do you care to comment further?
No, Mr. Speaker.